Well, good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN Sunday for Sunday, August 15th, 2021. We've got another great show for you this week. I'll be joined by members of the media, academia, and financial services as we analyze all the news in personal finance, healthy aging, tech, so much more. So sit back, relax, enjoy this episode of BRN Sunday. We're going to kick things off with a look at what's happening on Capitol Hill, legislatively, regulatorily, and litigation-wise. And joining us now to discuss this and a lot more, David Levine, Kevin Walsh. Both are known as the Legal Eagles, but they're also principals with Groom Law Group, an employee benefits law firm based in Washington, D.C. Gentlemen, thanks so much for joining us on the program again this morning.
Jeff, thanks for having us on. And, this week there's not a lot going on in Washington. You've got both the House and the Senate out for recess, but I think we're going to chat today about what's likely to come up when they get back.
Well, David, you and the Eagles are always in the throes of what you got your ears to what's happening in Washington, D.C. What do you think could be of mind for legislators when they come back?
Well, that's a really good question, Jeff. There's three words: money, money, money. It's how the world goes around, and it's what Congress does. They spend it. Every so often, though, they say they have to spend it and find a way to raise it at the same time. And that's where the discussion of retirement comes in. I think as we look towards the fall, we have an infrastructure bill. We have a budget reconciliation where with another $3.5 trillion potentially being spent. There's all these questions of how are we going to pay for all this? Now, Kevin and I will avoid getting into the politics of who's right, who's wrong, because let's face it, everybody at some point or another is willing to deficit spend, and everybody at some point or another says, yeah, we need to raise some money. But that's where the differences sort of end, the similarities, end, and the differences begin between a lot of the political parties. But there's always one constant reality. Retirement is at the top of the list. I think it's top two, top three. I always forget if it's number one in terms of the tax preferences. In other words, how much that we basically allow people to avoid paying taxes in order to encourage retirement. And given that retirement itself is almost like a big giant piggy bank, like when our firm did Save Our Savings Coalition, so to a bunch of changes back in the early Trump administration years, that was the concern. Retirement would be a piggy bank to fund effectively other budget items and say they were, quote, paid for by revenue from somewhere else. And given the trillions of dollars we're looking at here, it's back in vogue to talk about how do we raise money. There's two different areas where Kevin and I were thinking would make sense to talk today. The first relates to, I'll call it the traditional retirement discussion. That is, what do you do? That is, hey, should we be pushing more people into Roth? And we see that in some of like the Secure 2.0 language. We could talk about that more, where things like catch-ups would have to be Roth. Or should we cap the total amounts going into qualified plans? This goes back to the Obama administration, but should we say you can only have so much in a 401k? But that leads us to the second area that's really on the table as we look towards the fall. Through a leak of information, and the IRS, to their credit, is usually very protective, regardless of your politics. They really do take it seriously about releasing taxpayer data. But there was taxpayer data that was picked up by ProPublica relating to ultra-large individual retirement accounts by certain individuals who, whether it's venture-backed companies, startups, you name it, and how much money is in these accounts. We won't talk about any one person in particular, but there's certainly a movement growing on the Hill, and that we should talk about the consequences and unintended consequences in a second, to change the maybe maximum amount you can have in an IRA. The number that's commonly bandied about is $5 million, but I think one of the discussion items we're already hearing chatter on is, all right, maybe there are some limits out there at some point, but should we rush on this? Some who are opposed obviously are very opposed, but also there's the question of how do you deal with this? One area that Congress has been incredibly supportive over the years has been ESOPs, employee stock ownership plans. And we have a lot of employees who've built up pretty sizable balances and owners who sell their companies to their employees and wind up getting cashed out through ESOPs. Those accounts could suddenly have to be taxed where they weren't planned to be taxed. So it's not as black and white about just the big venture capitalist. It's a lot of small, mid-sized business owners as well. And you're starting to hear comments about that. So everything starts out as a very sort of clear distinction, super wealthy versus not. But there's a lot more to this. And just like in 2017, the 401k world was left alone from sort of major ratcheting back like state and local income tax, it's very possible that IRAs will be on the table, but I think you're going to see a lot more players coming to the fore because it's not just about one group. There's a lot of pieces here. And IRAs, especially when you look at the state programs, are viewed as the future for many underserved populations. And maybe they don't have big balances today, but a lot of people aspire there. You can tell that I think we should step carefully. But Kevin, what do you think?
David, I think you've hit basically the hot topics for how Congress could try to raise some revenue in a budget window. And I think it's important that we highlight the idea that when they focus on raising revenue, they look at it during a 10-year period. Just because when folks talk about ratification, some folks are scratching their heads because it says, well, we're taxing it today in exchange for not taxing in the future. And that's what's happening. But when Congress looks at this, they're looking at it over 10 years. So it by accelerating the payment of taxes, it helps them offset other things. When Congress has to spend $3.5 trillion, when they want to spend $3.5 trillion, there's going to be trade-offs that are made. I think we all hope to protect the retirement system as best we can.
That makes sense, Kevin. I agree. There's a lot to come. Even as we're recording this session this morning, there's discussions about holdups and tensions between different wings of the Democratic Party. Will things probably work out in the end? Almost inevitably something happens, but we'll have to see. And in that time, I think all these things are going to be on the table, Jeff.
Yeah. Well, guys, obviously this is a big deal with the passage of the infrastructure bill as you guys laid out. And I guess more to see, but this is a common occurrence now for politicians to look at different pots, to use your terminology, to pay for some of these budget items. So we'll just have to wait and see. I guess after Labor Day will be our first inclination when things kind of get back to quote unquote normal, because we don't even know what normal is anymore. Gentlemen, we're going to leave it there. Always a pleasure chatting with the Eagles. Want to wish you a very great weekend wherever you may be, and we'll talk to you again next week.
Thanks, Jeff, and listeners. Enjoy the rest of the program.
Thanks, guys. Bye. Welcome back. We're going to talk consumer products, tech, streaming, you name it. We covered on this segment. Joining me now to discuss this a lot more, he's lead advisor, executive producer for 7 Investing. We're talking to Daniel Klein. Dan, thanks so much for joining us on the program this morning.
Oh, thanks for having me on a Friday morning here.
Yeah, absolutely. Let's talk streaming. I know it's a hot topic for a lot of people for a lot of reasons, and also a passion of yours because you try out all the different players. Salesforce announcing, I think this week, that they are going to get into the streaming business with, I think it's called Salesforce Plus. I want to get your take on this.
Yeah, this is a terrible idea, or at least terrible execution. So they're going to be creating business content, and they're going to be putting it on their own platform. And Jeff, I know you, like I, consume a lot of podcasts and streaming content. And if I'm going to listen to a podcast, and podcasts are going to be part of this Salesforce program, I go to the Apple Podcast app and I listen to one of the podcasts I have in there. What are the odds that if I'm a Salesforce customer, and this is for Salesforce customers, that I'm going to go into Salesforce and wherever they've put these podcasts and find it and listen to it in a whole different way? So I don't think it's a bad idea that Salesforce is creating business content, but I think if they're doing it, it should be a marketing tactic, and they should be putting it on all the normal, everyone can get it channels. So put the video on YouTube, put the podcast and Spotify on Apple and all the podcast channels. Like, I'm not so sure the Salesforce customers going, you know what I need? Specific business podcasts from Salesforce. Like you're not really filling a demand. This isn't like a podcast about how to use Salesforce better. Like that might have some niche appeal. These are general business podcasts and videos. And I just think the idea is maybe not incorrect. not a bad idea for Salesforce to sponsor some interesting business content, but sponsor it in the places people are looking for podcasts. Like, Jeff, I have an excellent video show, and I play it just on an old VCR in my closet. It's amazing. The production values are high, but your bar to watch it is really difficult. And that's what Salesforce is doing here.
Yeah, I think it's interesting. And I don't know. I mean, Salesforce is used by so many companies, large and small, so many, probably millions of users. So maybe it's a good idea to have content flowing. But I can't get out of when looking at this lineup, David, Daniel, Dan. There's going to be a Trailblazer channel, a Primetime channel, a Customer 360 channel, and an industry channel. How is this different than Bloomberg? How is this different than Fox Business News or CNBC? Is it really going to be, the story is of success stories, thought leaders. I mean, all this content right now is available, types of content available in other spaces.
Yeah, look, I assume some of this content will be good. And even Amazon, which has hundreds of millions of customers, was doing original programming around, sort of like QVC style programming. And they don't really do that anymore. So obviously it didn't work. So again, I think Salesforce getting behind and paying for some content is a good idea. They have access to people. Look, they own Slack, so they have an awful lot of users they can promote content to, but make that content as accessible as possible. Nobody's like, you know what I want? I want to download the Salesforce streaming app or find some different venue or have to be logged into Salesforce to listen to a podcast. Like, you want to make things as simple as possible, and this just doesn't seem that simple. And look, my barrier to downloading a new app, and I don't know if this is going to be an app or if it's going to be embedded in Salesforce or some other method of delivery, but it's pretty hard to get me to deal with signing up for something or creating a new way to listen to something. It would have to be really, really good. And this might be fine. It might be useful. It's not going to be must-see programming.
Dan, let's transition to Disney. I know you're a big advocate of Disney Plus, and you check out, I think you go to Walt Disney World, is it those? Yeah, you go to the one in Orlando, I think. So you're a big Disney fan. They released earnings yesterday, Thursday. What did we learn from those earnings?
Yeah, so these numbers are great, and I'll touch quickly on theme parks. The theme park division is back to being profitable, but that's a little bit of a misstatement because that division also includes consumer goods, and their consumer goods division was up. That being said, their U.S. parks had a plus 2 million cash flow. So is that what it used to be? Absolutely not. But I think we're heading towards a holiday season that's perhaps not business as usual, because I don't think we're going to see, maybe at least for Thanksgiving, we're not going to see full on 100% crowds like they used to be. But I think we're going to see 70, 80% with people spending more, with hotel prices recovered, with people throwing around money and maybe spending more at restaurants than they might have otherwise. So I think the numbers for parks are upbeat. They're encouraging. Obviously, there's some worries with the Delta variant, but there's also some things helping Disney there. The fact that it's impossible to rent a car at an affordable price in Orlando actually forces people to stay on property. Jeff, as you know, I have a vacation property that's about 15 minutes from Disney. Well, I'm not attracting any Disney visitors because if you're not a Florida local or a Georgia local who drove in, you're not going to stay off property where you have to rent a car and it costs, $150 a day. So that's really good for Disney. But the real story here, the exciting number is Disney Plus. Disney Plus now has 116 million subscribers. That's up from 57 million a year earlier. So basically, they doubled. And that's up from 103 million in the second quarter. So in one quarter, they added 10 million people. Overall, Disney has 174 million subscriptions across Disney Plus, ESPN Plus, and Hulu. Jeff, this is really, really exciting, and they're doing it very efficiently. So what did they release in the last quarter? Well, you had Loki, you had Falcon and Winter Soldier, you had things like the Mighty Ducks series. You didn't have these seemingly hundreds of shows Netflix throws at the wall. So I'm really, really encouraged by these numbers.
Dan, I'm on the Disney Plus website now, and I'm just kind of paging through. I mean, they have a lot of content, and some things that I didn't even think were Disney at all. For example, I didn't know Avatar, and it just could be my ignorance, but like Avatar, Mrs. Doubtfire. I mean, these are great feel-good movies.
So a lot of those, Avatar and I believe Mrs. Doubtfire, were part of the Fox purchase.
Hmm.
So Avatar was an interesting one because Disney paid significant money to license Avatar for its Animal Kingdom park, and it has a really the first. Well, I guess Harry Potter would be the first, but the third theme park land that was so incredibly themed, where when you're in the world of Avatar or Pandora, you feel like you're on a different planet, much like the new Star Wars land feels like.
Hmm.
Disney was paying money to license that, and then they bought the company that owned it. So now there's a whole bunch of Avatar sequels coming. Obviously, it's easier for them to expand and do things in that land. Yeah, their archive is incredible. Like, you don't think about it, but just buying Fox gave them The Simpsons. You could argue that the $4.99 a month or whatever you pay, $6.99 a month for Disney Plus is worth it just for The Simpsons, for getting all the other things you get. If you're a family that has young kids, just the classic Disney Kids archive and the Mickey Mouse stuff and all of that is worth it alone. But as an adult, Disney Plus pretty much always has one show I'm watching. Right now, I just finished watching The Bad Batch, which is a Star Wars show, animated, sort of a spin-off from the Clone Wars. And I watched Loki, I watched Falcon and the Winter Soldier, I watched WandaVision. I'm excited to watch the Hawkeye series, which comes next. Obviously new seasons of Mandalorian and Boba Fett getting his own show. Every show they put out is either a minor hit, like I would say The Bad Batch appeals to Star Wars aficionados, not necessarily casual Star Wars fans like, say, The Mandalorian would.
Are those numbers national or international numbers, the Disney Plus, ESPN numbers?
Those numbers are international, but we're at the very beginning of the international rollout. The numbers are hurt a little bit by India and Indonesia, which have a lower average revenue per user. But overall, the company expects by 2024 to double those numbers. So this is really, really encouraging.
Yeah, really good numbers. Dan, great to talk to you. Great to get your perspective on streaming and what it all means going forward. We're going to talk to you again very soon. Have a great rest of your weekend.
I'll see you then, Jeff.
Bye, buddy. Welcome back. Now time to talk healthcare. A lot more. Joining us online, she is the editor, the healthcare editor for Business Insider. She's also the editor of Dispensed, a weekly newsletter focused on aggregating and curating all the news in healthcare. We're talking about Lydia Ramsey Flanzer. Lydia, so great to have you back on the program. Thanks so much for joining us this morning.
Yeah, thanks for having me.
Just another quiet week in the in the world of healthcare, Lydia. What's top of mind for you and the team over at BI this week?
Yeah, I think like most of the country, we're kind of grappling with what's happening right now with Delta. The Delta variant spreads across the U.S. and floods hospitals. I wasn't expecting to have one more wave of headlines like this, but gosh, I hope it's the last one we're seeing. A lot of discussion this week about booster shots and what they mean. What is a booster shot? Obviously, there's some news last night about it. On Thursday, the FDA said that they would allow for some people to get a third dose of Moderna or Pfizer's vaccine. This is for immunocompromised people. So this is people with a weakened immune system, such as like organ transplant folks or people going through cancer treatment, things like that. So it's not for, everyday people. But it's been interesting. Israel, on the same day, kind of signed off on anybody over 50 getting another shot. So it's a crazy time.
Yeah. Now, Lydia, does this mean, can you mix and match? Are we clear whether, so say I get the J&J shot, can I mix and match with other types of vaccines? Well, that's not a good example, but if you get Moderna or Pfizer, because they're both similar types of vaccines in the sense of how they operate. Can you mix and match, or do you have to get the same one you always get?
I would have to double check if the FDA gave guidance on the Moderna to Pfizer or Pfizer to Moderna. But my understanding is that if you've gotten 2 shots of Moderna, you should, if your doctor is recommending that you get a booster shot, you should definitely try to get the same one. Just to uncomplicate things, there are studies being done, especially your question about J&J is honestly a very good one, because there's been that kind of big question as we saw the different effectiveness levels of the J&J vaccine. A lot of people are like, oh man, should I rush in and get a 2-dose shot at some point soon? So it's been a big question for quite a few months now, especially as Delta kind of kicks up. But for now, I don't think there's like any super clear guidance. The WHO kind of came out and we're like, guys, if you've already gotten one course of vaccine, maybe let's not double up just yet. Let's let other people have it, which is, of course, easier said than done. But it's definitely a big question mark that people are exploring. I definitely think I would be grappling with that if I got the J&J shot.
Yeah, I think it's going to be, obviously the not, I don't know, research, but the results are not in because we don't know the long-term efficacy of all these things, right? I mean, this is such a new vaccine. I guess they have to explore one, the long-term effects of COVID. We don't know that. We have an idea, but we don't know. But also the long-term effects of what mixing and matching could mean, and what the vaccines mean longer term to protecting you from whatever the next variant is. Because from my understanding, you correct me where I'm wrong, is that just like the common flu, there's always different mutations and different strains. So this thing will continue to change over time, I would think. The Delta variant may become the another named variant at some point. Maybe not in the near future, but in the future.
Right. Yeah. It's hard to think about. And yeah, to be super clear, like the booster shots that we're talking about, the FDA signed off on kind of for in really specific, really constrained cases, that we're talking about the same dose just for a third time versus a variant specific dose. But that's something that some of the companies are also exploring is, what can you create a tailored variant specific vaccine booster? But the jury's still quite out on that one.
Yeah. Lydia, I noticed Dollar General getting into kind of the healthcare business. I think they hired their first ever chief medical officer. What does that say, that a discount retailer enters the healthcare arena?
Yeah, I think it's fascinating. So if you've been following along, and I'm sure you and I have talked about this a lot of retailers have kind of upped their presence in healthcare. We've got Walmart. They started opening some clinics. They're doing a lot of telehealth work. Amazon is another kind of retailer, if you will, behemoth in other ways too. They've obviously got their pharmacy set up, and they're expanding their work with Amazon Care, which is their medical care service. But this is kind of the first time we'd heard of ambitions from some of the discount retailers, that's like Dollar General or Dollar Tree. And I think they have some really interesting ways that they could really tackle this. So I think to start, you mentioned they hired a chief medical officer. This is the first time they've had someone in that position. At the same time that kind of news came out about a month ago, they also kind of announced some ideas to revamp some of the wellness and health products that they offer in the Dollar Generals. And so, that's consumer goods, things like that. People might be shopping for otherwise at like a pharmacy or something. But I think what's really interesting about this particular space is just where Dollar Generals are based. They've got 17,000 stores, and there are a lot in like more rural populations where you might have to drive quite a ways to get to a pharmacy instead. Maybe you could just go and do something for your health at Dollar General, whether it's a telehealth appointment or, maybe they'll set up pharmacies. It's kind of interesting to think about the potential. It's definitely quite up in the air at the moment, but it was fun to have our reporters think about.
Yeah, and I guess just to refresh the audience's memory, I mean, access in the rural parts of the U.S. to good medical care, really challenging. I mean, there is a difference if you live in a big suburban, urban area. You have more access to doctors, healthcare organizations. So this would be just another arrow in the quiver, to use that old, regularly used cliche to deal with that particular issue. And Dollar General, I think I've actually shopped there numerous times. I mean, they have a habit of driving down costs. I think they buy things in bulk, right? And they're able to really drive down in the unit costs by doing that. And maybe they can offer a new way to reduce overall cost of healthcare. I mean, I know it didn't work out too well for Amazon, JP Morgan, and Berkshire Hathaway working together, but I know they're working independently. Or they wanted to try their own thing. I'm not saying it didn't work out, but they wanted to try their own thing. They had their own ideas. But maybe this is just another way to drive those healthcare costs down and deliver adequate healthcare.
Yeah, I think it's always interesting when we see someone come in from kind of the quote unquote outside, right? Like we've got all these players that are entrenched and they've been in the industry for decades at this point. So to see newcomers come in, I'm always really curious. It's been interesting. It definitely has, to your point about Haven, that was the joint venture between those three big companies. It has its promise and it has its downfalls. Like these things are easy to spin and fall apart, or they're easy to come together and be disruptive. So it'll be interesting to watch over the next couple of years, I'm sure.
Yeah. I mean, I'm not talking that it was bad or good or anything. I think if you can try to do something, that's amazing. And look, I love when outsiders come in and try to disrupt and make things better through costs and delivery. So credit to them and anyone else who tries. Lydia, we're going to have to leave it there. I hope you have a wonderful, enjoyable rest of your weekend, and we look forward to catching up with you again very soon.
Thanks so much. Talk to you later.
Take care. Bye. Welcome back. Now time to talk travel. Joining us on the line, he is the multifaceted, multi-talented reporter for MarketWatch, personal finance, travel, and of course real estate. I'm talking about Jacob Passy. JP, so great to talk to you. Thanks so much for joining us this morning.
Yeah, glad to be here.
So, what's going on with travel this week? I know, people, COVID popping up all over the place, and airlines maybe shutting down, not going places they should be. What can you tell us?
Exactly. So, this week we got a profit warning from Southwest Airlines, and they basically, laid out that they are expecting their profit for the latter half of the calendar year, and the next few quarters for them fiscally to be less money making than they had anticipated. A lower profit in the months to come. And they said that their reasoning for that is because they are expecting to start to see new waves of folks canceling trips in light of the, Delta variant and the rise in cases that has caused. So, analysts took that news in, and they basically said, you know what, Southwest is just going to be the tip of the iceberg. This is probably going to be a common thread from airlines over the next few weeks. We're in earnings season, so this will come as they report earnings or after they report earnings, and we're going to see more announcements like this, most likely, according to travel analysts, in the weeks to come. So it's a little depressing, and I'm sure there's a lot of folks out there who have plans for travel later this year, maybe a last minute summer getaway before school starts for the kids in September, or perhaps trips in the fall. Even folks might even be thinking about, their holiday travel. This is the time of year a lot of folks book their trips for Thanksgiving and Christmas and Hanukkah and New Year's. So it is a stressful situation out there for people. And, I think that the main thing that's going to be the moving forward path for us is change. I think everything is going to be changing when it comes to travel.
I think you're right. And Jacob, I wonder how much, you sit on these analyst calls and you probably look at all these figures. I'm not sure. I wonder how much some of the inflationary items like fuel, I think fuel costs had gone up. I don't know if that's receded a bit, but I would imagine that had some headwinds for the travel industry as well.
For sure. Especially for airlines, that's going to be a major factor for their profits. And when things like that are also at play, the concern you should have as a traveler, and the reason you need to be prepared, is because airlines are going to be looking to cut costs as much as possible to make sure that they don't see another quarter or two or year like they did last year when travel really bottomed out because of the pandemic. So they are going to probably have to resort to a lot of things that we saw last year. Some airlines are probably going to choose to reduce the number of flights they run per day between destinations, or fully cut certain routes to be able to adjust their flights accordingly, and make sure that they are saving money, reducing their costs, etc. And, and if these waves of cancellations continue, I mean, that will also affect things. If not as many people are flying, they will have to, maybe again consider grounding jets, putting them in storage, those types of things that we saw earlier in the pandemic. Those might come back. So, if you are someone who has travel booked, make sure that you have some degree of flexibility, I would say, or, figure out, what I did, and you and I have talked about my trip overseas. When I was planning that trip, one of the things I did to give myself a little bit of a cushion or just, relieve the anxiety a bit is I made, a list of other flights I could take if my flight were canceled, other airlines I could fly with, and other folks may want to do the same to the extent that they can, research what your other options are. So in the event that an airline chooses to cancel your flight, or, maybe they rearrange it in a way that doesn't work for your plans, you can figure out what your other options are, and pay attention to the cancellation policies with airlines, especially if you're thinking of proactively canceling your trips. Don't assume that the policies from last year are still in place. They are in some cases, but it very much varies from airline to airline, and depending on the type of route. International trips, you generally still can cancel without facing any sort of cancellation fee, or rebook for free, only having to pay the difference in fare. But that might not be the case, for domestic routes, because, domestic travel resurged this summer, whereas international travel is still much lower than a year ago. So, keep that all in mind.
And Jacob, would it make sense? I love the tip that you gave at how you made a list of other flights. If you're flying domestically, should you also take into account maybe Amtrak, some of the buses? I mean, there's a lot of the stuff that runs obviously in the Northeast and the South, but should you maybe think about other ways to get back to where you need to be?
Yeah, no, it's a good, I see a lot of people on social media posting that they were taking, cross-country Amtrak trips in lieu of flights. Maybe they were doing that out of a sense of safety or comfort, but whatever the case may be, definitely research what your other options are. And some of the same factors will apply. I mean, when it comes to rental cars, for instance, we're still seeing those shortages play out. And so, don't hold off on booking would be my other piece of advice, if you, for things like that. But when you book, make sure you have a very good sense of what the cancellation policy is. And if you're worried about COVID changing things, consider travel insurance. You can usually get, they're more expensive, granted, but you can usually get a quote unquote cancel for any reason travel insurance policy where you can basically, no questions asked, essentially cancel your whole trip, a portion of your trip, whatever the case may be, and get, reimbursed by your travel insurance if you're not able to get reimbursed by the actual travel providers themselves. The catch with it is usually those policies you have to book fairly soon after you made your first reservation for your trip. So if you already booked, your flights 2 months ago, you may not qualify for those policies. But if you book them today and then try and buy travel insurance tomorrow or a week from now, you probably should be fine. So those are things to keep in mind, and ways that you can give yourself a bit more peace of mind during a kind of stressful time to travel.
Yeah, definitely COVID has put a wrench into a lot of people's travels, and you really have to consider all of these things in totality when you're thinking about traveling. Jacob Passy, it is always a pleasure chatting with you. Thanks so much for making time out of your busy schedule. Have a great rest of your weekend, and we look forward to talking to you again very soon.
Talk soon. Take care.
Bye-bye. Welcome back. Now we're taking a look at markets and the economy. Joining us on the line, he is the lead anchor for the TD Ameritrade Network. You can see him Markets on the Close and Morning Trade Live. We're talking about Oliver Rennick. Oliver, it's great to talk to you as always. Thanks so much for joining us on the program this morning.
Thank you, Jeff. Yeah, for sure.
Yeah, let's get into it. Give us your take on the market. Let's start with just the market in general.
Yeah, basically the standard kind of baseline now for stocks is just this steady grind higher. We have yet to really resolve any of the underlying concerns of the market, and that is most easily seen in the weakness and the inability of the small cap index, the Russell 2000, to stage any kind of a meaningful rally. We did get some hints this past week and at the end of last week, so call it about 8 days of a burgeoning reflation and recovery trade that reflects optimism about the reopening process despite what's happening with COVID. But it just hasn't taken off really in a convincing way yet either. So basically, the best way to describe the last 8 days in the market is our 2-month-long sell-off in recovery trades and cyclical businesses has stopped. It hasn't reversed, but the selling has stopped. And that's important because if there's going to be a trend change or a rotation into more cyclically dependent businesses and reopen stocks, it's probably not going to just happen on a dime. The leadership and the skew in the market towards tech companies has to slow first. And so that's kind of what we're seeing over the last 8 days. But it's not terribly convincing yet because we are still getting news of COVID cases rising and cruise lines that are finding passengers that were vaccinated getting the virus. But it does seem like these stories haven't quite had the impact that one might expect. For example, this week, Southwest announced that Delta would impair their outlook, but the stock actually rallied on that day after starting off lower. So there are signs here that the market does, I think, fully understand the risk of Delta virus at this point. It looks like it's mostly priced in. So assuming our case count goes down from here, then I think the stage is set for a more deep and meaningful rotation soon. And if not, then we might have other bigger problems.
Well, and Oliver, I mean, markets are typically driven off of sentiment, right? What we think, and I guess people, when you look at both investor sentiment and business sentiment, I think people long term believe that, look, things are going to change, but we'll get through this. We'll be able to deal with it. I guess that's what's kind of holding the market up at this point.
Well, this week we saw that some of that is cracking a little bit. Friday we got a surprise miss on consumer sentiment, down at 70 instead of 80, lowest number we've got in 10 years. So it's starting to show up a little bit. To your point, if that strong sentiment has been keeping things together and keeping people in a risk-on mode, that sentiment number that we got on Friday from the University of Michigan's gauge is a sign that is perhaps cracking a little bit. The other thing, too, is just really to explain the stock market right now, it requires no elaborate, fancy, or sophisticated real analysis. All it requires is just math from big tech, and it's tech companies and fewer tech companies that are dragging the market higher. We have the most extreme market skew that we've seen in a very long time, possibly ever, in terms of what's driving the overall index, and that is the strength in companies like Apple and others this week that are strong. So even though I know we've been having these conversations, I've probably sounded cautionary for 3, 4, 5 months maybe. Over that period since really February of this year, the participation to the upside in the market has gotten thinner and thinner. So we still have to be on our toes at this point.
Oliver, typically the dog days of August are times when people take time off. They go away. Even fund managers and investors might take some time and go chill till after Labor Day. What are some things in the quick minute and a half we have left people should be thinking about in these last couple of weeks of August?
Well, we've got a little bit of a lull between now and Jackson Hole and the big monetary policy conference at the end of August. That's the next big event from a monetary side. But the other story that we need to pay close attention to is the infrastructure bill in D.C. that, while being described as bipartisan, has now some very deep political complications because of the administration's desire to tie it to a larger $3.5 trillion budget and stimulus program. So that could be a very big story if that is not as sure thing as it was made out to be. I do think that's also being processed by the market right now, the possibility that that $500 billion infrastructure plan may not be as easy to pass as was thought, earlier this week when that bill came through. So so far, we're not really getting the follow through on that story that you would really want, and we need that. I think at this point, pretty clearly, to keep some strength in some of these cyclical and economically dependent businesses.
Yeah, well, we'll certainly keep our eyes peeled these last couple weeks of August and into Labor Day. Oliver, it's always a pleasure chatting with you. Thanks for breaking down the market and all you do on the TD Ameritrade Network. Have a great rest of the weekend. We'll talk to you again soon.
Absolutely. Thank you, Jeff.
Well, that wraps up this episode of BRN Sunday. Have a topic of interest, someone you think we should talk to, drop us a line. And don't forget, for all the information in retirement, markets, technology, personal finance, so much more, and all in one place, check out today's edition of our daily newsletter, The Morning Pulse. We're back again tomorrow, this time for BRN AM. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.